Hi. This video will give you a chapter-wise summary of the book, The Intelligent Investor by Benjamin Graham. It is a classic investment book that provides valuable insights and principles for successful investing. Here's a summary of each chapter with key details. Chapter 1, Investment versus Speculation. Graham differentiates between investment and speculation. He defines an investment as an operation that, upon thorough analysis, promises safety of principal and an adequate return. Speculation, on the other hand, involves buying securities with the expectation of profiting from market fluctuations. Graham emphasizes the importance of adopting an investment mindset rather than speculating. Chapter 2, The Investor and Inflation. This chapter addresses the impact of inflation on investments. Graham advises investors to consider the effects of inflation while making investment decisions. He recommends focusing on investments that offer protection against inflation by choosing stocks with a strong history of dividends and companies that can increase prices in response to inflation. Chapter 3, A Century of Stock Market History. The level of stock prices in early 1972. Graham analyzes stock market history to evaluate the level of stock prices in early 1972. He warns about market fluctuations and highlights the need for careful analysis of stock prices and valuations before making investment decisions. Chapter 4, General Portfolio Policy, The Defensive Investor. This chapter introduces the concept of the defensive investor, someone who is passive and prefers a defensive approach to investing. Graham suggests a defensive investor should focus on a diversified portfolio consisting primarily of stocks and bonds. He provides guidelines for asset allocation and suggests index funds as an efficient investment option. Chapter 5, The Defensive Investor and Common Stocks. Graham outlines his approach to common stock selection for the defensive investor. He advises investors to choose stocks of large, well-established companies with a long history of stable earnings and dividends. Graham also discusses the importance of analyzing financial statements to assess the company's strength. Chapter 6, Portfolio Policy for the Enterprising Investor, Negative Approach. This chapter addresses the enterprising investor, someone willing to dedicate time and effort to active investing. Graham suggests the enterprising investor should adopt a negative approach, which involves eliminating poor stock choices rather than searching for the best ones. He recommends a detailed analysis of individual stocks and bonds. Chapter 7, Portfolio Policy for the Enterprising Investor, The Positive Side. Graham discusses the positive approach to portfolio policy for the enterprising investor. He focuses on the concept of value investing, which involves finding stocks trading at a discount to their intrinsic value. Graham emphasizes the importance of fundamental analysis and suggests a margin of safety to protect against errors in judgment. Chapter 8, The Investor and Market Fluctuations. This chapter delves into the psychological aspect of investing. Graham advises investors to adopt a disciplined and patient approach, ignoring short-term market fluctuations. He suggests investors should take advantage of market downturns by buying stocks when they are undervalued and avoiding excessive trading based on market sentiment. Chapter 9, Investing in Investment Funds. Graham examines various investment funds, including mutual funds and closed-end funds. He cautions investors about the costs, fees, and potential risks associated with investing in funds. Graham advises investors to carefully analyze fund performance and expenses before making investment decisions. Chapter 10, The Investor and His Advisors. Graham discusses the relationship between investors and their advisors. He stresses the importance of selecting competent and trustworthy advisors and cautions against blindly following their recommendations. Graham suggests investors should educate themselves to make informed decisions. Chapter 11, Security Analysis for the Lay Investor, General Approach. This chapter provides an overview of security analysis for the lay investor. Graham emphasizes the importance of analyzing financial statements, understanding key financial ratios, and assessing the company's competitive position. He encourages investors to adopt a conservative approach to investment analysis. Chapter 12, A Comparison of 4 Listed Companies. In this chapter, Benjamin Graham compares 4 different companies in terms of their financials, dividends, and stock prices. He highlights the importance of analyzing financial statements and understanding the underlying fundamentals of a company before investing. Graham emphasizes that investors should focus on the long-term prospects of a company rather than short-term fluctuations in stock prices. Chapter 13, Stock Selection for the Defensive Investor. Graham introduces the concept of a defensive investor, who prefers a conservative approach to investing. He discusses various criteria for stock selection, including financial stability, dividend records, earnings growth, and reasonable stock prices. Graham advises defensive investors to diversify their portfolios and avoid speculative investments. Chapter 14, The Investor and Market Fluctuations. This chapter focuses on market fluctuations and their impact on investors' decisions. Graham argues that investors should not base their investment choices on short-term market trends or emotions. He emphasizes the importance of maintaining a rational and disciplined approach to investing, even during periods of market volatility. Chapter 15, Stock Selection for the Enterprising Investor. Graham discusses stock selection for the enterprising investor, who is willing to devote time and effort to researching and analyzing investments. He presents various techniques for stock selection, including analyzing earnings and assets, studying industry trends, and considering special situations such as mergers and acquisitions. Graham cautions enterprising investors against overconfidence and advises them to conduct thorough research before making investment decisions. Chapter 16, Convertible Issues and Warrants. Graham explores convertible issues and warrants as investment options. He explains the characteristics and advantages of convertible securities and warrants, highlighting their potential for capital appreciation and income generation. Graham provides guidelines for evaluating these instruments and incorporating them into an investment portfolio. Chapter 17, 4 Extremely Instructive Case Histories. Graham presents 4 case studies that illustrate important investment lessons. These case histories include examples of successful and unsuccessful investments, highlighting the importance of thorough analysis, diversification, and understanding the intrinsic value of a company's stock. Graham emphasizes that learning from past investment experiences is crucial for future success. Chapter 18, A Comparison of 8 Pairs of Companies. Graham compares 8 pairs of companies to highlight the differences in their financial performance and stock prices. He provides a framework for evaluating these companies based on their earnings, dividends, and book value. Graham underscores the significance of fundamental analysis and warns against overvaluing popular stocks without considering their underlying financials. Chapter 19, Shareholders and Managements, Dividend Policy. Graham discusses the relationship between shareholders and company managements, with a focus on dividend policy. He explains different dividend policies, such as the stable dividend policy and the residual dividend policy. Graham highlights the importance of understanding a company's dividend practices and their implications for investors. Chapter 20, Margin of Safety as the Central Concept of Investment. In this final chapter, Graham introduces the concept of the margin of safety, which he considers the central concept of investment. He explains that investors should always seek to purchase stocks at prices significantly below their intrinsic value to protect themselves from unforeseen events or unfavorable market conditions. Graham emphasizes the importance of rationality, discipline, and a long-term perspective in investing. Overall, The Intelligent Investor by Benjamin Graham provides valuable insights into investment strategies, emphasizing the importance of fundamental analysis, long-term thinking, and a disciplined approach to investing. It serves as a guide for both defensive and enterprising investors, offering practical advice for constructing and managing investment portfolios. If you like our work, please like and share the video and subscribe to our channel. This will keep us motivated to better work and bring more such videos in future. These were all the important learnings from the book. If you would like us to summarize any other book, please let us know in the comments. Thanks for watching.